Picture this, you're sitting in a dimly lit conference room in New York, watching Aswath Damodaran pull up spreadsheets packed with numbers that seem to dance off the screen. The CEO of a mid-sized tech firm anxiously waits, hoping these numbers will reveal the true worth of his company. But valuation, that mysterious art, feels like guesswork. Damodaran promises a secret, a method so reliable, so honest, it turns speculation into clarity. What's this magic formula? Let's unpack it. Numbers alone won't unlock value. Damodaran dives beneath the surface, where stories, risks, and markets collide, revealing the true essence of worth. Damodaran walks us through a classic, Amazon's journey from losses to cash flow kingship. Back in the late 90s, Amazon's stock soared despite bleeding cash. He shows how understanding expected future cash flows, rather than past profits, uncovers the story investors believed, turning hope into calculated value. Think of risk like the weather vane on a sailing ship. It isn't the wind itself, but a signal of conditions. Damodaran teaches us to read risk as the market's ever-changing signal, adjusting discount rates to navigate uncertainty. Higher risk, you pay less for that future cash flow, simple, like paying a premium for sunny skies. Valuation isn't static. In today's stormy market seas, Damodaran revamps traditional models by integrating intangible assets, brand equity, and even investor psychology. It's like upgrading from paper maps to GPS, turning static guesses into dynamic guides that help CEOs steer their companies through complexity. Grab your toolbox. Damodaran's models aren't abstract theories, but practical instruments. Understanding each tool's muscle makes all the difference in accurately pricing value. Damodaran's DCF model is more than finance jargon. He breaks it down with a case study on Starbucks, showing how every decision, from estimating future sales growth to setting the discount rate, is like tuning a heartbeat. If you misread it, you risk a flatlining valuation. Relative valuation, the street-smart cousin, compares companies like comparing apples in a basket. Using Coca-Cola and Pepsi as examples, Damodaran explains how multiples like PE ratios shine a light on market sentiment and peer benchmarks, sometimes revealing hidden premiums or discounts. Markets aren't perfect. Quirks abound, illiquidity, cyclical businesses, or accounting tricks. Damodaran shows how you adjust models like a mechanic tweaks a vintage engine. For instance, family-owned businesses with less market data require tweaks, not just guesswork. The payoff? Cleaner, sharper valuations that cut through noise. Valuation isn't just academic. It's the secret weapon for CEOs and strategists who want real control over their company's destiny. Damodaran highlights Nokia's pivot in the 2000s. By realistically valuing their mobile division, executives realized the true cost of delaying smartphone innovation. Suddenly, valuation wasn't a number, but a strategic beacon lighting tough decisions and resource shifts. A valuation's worth fades if it doesn't translate. He teaches CEOs to tell clear stories, like Netflix explaining their subscriber growth drivers alongside the numbers. This storytelling blends hard math with narrative art, winning investor trust and boardroom support. Markets never sleep, and neither should valuation. Damodaran argues for models that update continuously, incorporating real-time data and sentiment shifts, almost like a weather forecast that refreshes every hour. This agility helps leaders steer startups or giants through volatile skies, reducing surprises. Remember that conference room in New York? The CEO left not just with numbers, but with a story, a roadmap showing exactly where his tech firm's value lived, breathed, and could grow. Damodaran's magic isn't a mystical formula, but the clarity of breaking down risk, cash flows, and market realities into actionable insights. Next time you face a valuation puzzle, try this. Start with the story before the spreadsheet and watch everything snap into focus. Subscribe for more book summaries like this one.